Hi there, welcome back to Kneppy Invest, and welcome to another technical update video where I go through loads and loads of charts, starting with indices. Then we'll turn our attention to commodities, looking at gold, silver, copper, oil, iron ore, and then we'll turn our attention to bonds and cryptocurrency, and then currency, plain old normal currency. And then we'll have a look at some individual companies' charts. So I've chosen 12. All 12 companies are listed on the ASX. And all 12 companies, I think all 12, have signs of possibly turning around. So maybe sentiment shifting to from negative or neutral to positive, and maybe a shift in trend as well. And who knows, some of these companies could move into an uptrend that lasts a few years, maybe even 5 years. And that is exactly what I'm looking for every single day. Okay, so let's start off with looking at some indices, starting off with, of course, the XJO. I think some might prefer the XAO, but they're almost identical. In fact, if you overlaid the XJO on top of the XAO, there's almost no difference. And that's the main reason behind that is because in both the XJO and XAO, they are dominated by the biggest companies. So a small difference between the two, because they both got the same companies in it at the top end. Anyway, XJO did reach an all-time high during the week, up about 0.5% for the week. A little bit of a negative spin on Friday's session. So even though it was up slightly, 0.19%, that was a day we did see a record high. And as soon as we got to the record high, we did see a bit of selling coming in. I suppose that is understandable because some investors don't like it when something's at an all-time high. They think it's expensive, that sort of thing. But you always want any financial asset to be continually reaching all-time highs. And that's actually a good thing. That is a good thing. It's not actual really good reason to sell something just because it's an all-time high. In fact, if a company is reaching all-time highs continually, that is a great buying opportunity because it's a sign the company could be high quality. So is the XJO high quality? Well, maybe not. I'm not sure if you can call an indice high quality or not. I haven't really thought about it. But anyway, the XJO did reach an all-time high on Friday, but a little bit of selling. And the reason I'm saying there's a little bit of selling is because you can see a bit of a shadow above their main body. And in fact, if you have a look at, say, the 5-minute chart, you would see a bit of a sell-off during the day. Yeah, the high was reached 1 hour after the market had opened, and then we did see a little bit of selling. It's nothing too serious. There's no reason to go out and sell all your portfolio on Monday. Maybe the only reason, bit of weakness in Asia, maybe a bit of a negative turn in the American futures. But in saying that, well, I suppose Dow Jones was down, NASDAQ was up. So probably a chance we might see a little bit of red on the ASX on Monday, but nothing serious. So anyway, all looking good. Still in an uptrend, XJO. No reason to be bearish at this point. You could throw out everything about the market being overvalued, but the market can remain irrational for a long period of time. And who knows, maybe the XJO will go up another 10, 20% from here before we see a significant correction. We just don't know. So I just like having a look at the chart and saying and thinking and knowing that there's nothing seriously wrong with this chart right now. No reason why it's going to drop significantly over the next few weeks. Now, who knows what's going to happen? I did see and read that Europe, all the leaders in Europe, having a meeting, an emergency meeting, and so who knows what's going to happen in the next few weeks. I did also read that Russia is building their forces along the Belarus-Poland border or something like that. Anyway, so who knows what's going to happen in the next few weeks, and there's no point guessing or trying to predict what's going to happen because you just don't know. Anyway, so that's the XJO, still looking pretty good. Still above the top of the trading channel. So eventually we might have to get rid of the trading channel because it's not valid anymore. In fact, this is the first time over the past 15 years that the XJO has been above the top of the trading channel for an extended period of time. It briefly went above it back in August 2021, but fell back below. So yeah, maybe this trading channel, which has been in existence for a long period of time, is null and void. Anyway, we'll wait and see. And even if you have a look at the weekly chart, it's been an uptrend. Well, the XJO has been an uptrend since late 2023. So we are talking about only 14, 15 months. So I suppose that's not a long time. What about the XSO? I sort of do prefer the XSO. Now, probably one of the problems with the XSO, it doesn't fit my criteria of small caps. My definition of small caps is a little bit different than the market definition. So there's quite a few companies that would be in the small cap industry that I would claim and argue are bigger and don't belong there. The other problem with the XSO is when companies are successful, small companies are successful, they get bumped out of the XSO and then put into one of the other indices. So they do lose some high quality companies. Well, maybe not high quality companies, but they do lose some successful companies because they become too big for the small caps. And then because they lose those companies, the next company in line might be a lower quality company, a crappier company, more of a story stock, that sort of thing. So that is one of the problems with the XSO. In saying that, the XSO is at a really interesting point right now. So at around about 3,240 or so, it's a little bit lower than that. We'll say 3,250. There's a very strong resistance level. And the reason it's strong resistance level is because we have seen the XSO try to get above that level a few times in the past 4 or 5 months and fail. In fact, we can see and count how many days it has reached this level and then pulled back. We're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. And now we're on to the 14th day. It's reached this level and has struggled. Now, we did see a little bit of selling, just like the XSO in the XSO on Friday session. In fact, if you have a look at the 5-minute chart, the XSO, look at that. Beautiful beginning of the day. It screamed above that resistance level and then pulled back. Now, we did see a little bit of buying towards the end of the day. It hit that sort of resistance level, and we saw a little bit of buying. So, potential breakout, just a potential breakout for the small caps. And that could be an interesting breakout for small cap land in Australia. So by far, if I had to choose between the XGO and XSO, I would choose the XGO, but I think that's being a little bit unfair for the XSO. And I'll be honest with you, I have compared my performance on my portfolio to the XGO and the XSO, and I significantly beat the XSO. The reason I used to compare my portfolio performance to the XSO is because I did prefer small caps. And I think that's a little bit unfair because a lot of the small caps I have owned in the past have grown too big for the small cap portfolio, for the small cap indice. Okay, that's the Australian market. No concern at all. I'm not like Steve Van Meter, who is ultra bullish. I think every single day he releases another video that, bearish, he's ultra bearish. He releases another video that the world is going to burn and collapse within the next week. He's been doing that forever, ever since I started watching his videos. In fact, his commentary, not his commentary, but his comments, people remarking on his comments, it's actually probably even just as fun as a read as just watching his videos because you can tell a lot of people who have different opinions than he does, write comments. Anyway, now on to the American indices. We'll start off with NASDAQ. I have a feeling NASDAQ might have reached its all-time high on Friday. I have a feeling. Yes, it did. I'm not sure why I have that feeling, but did it? Oh, it's close. Yes. On the 16th of December, the NASDAQ reached a high of 22,133. So 22,133, and the high on Friday, 22,139. So yes, it did reach an all-time high on a Friday session. So again, whenever indice is at an all-time high, that's a good thing. Not a negative thing. It's no reason to sell. It's a good thing. Because if you go through the history of the NASDAQ, it's continuing reaching the all-time highs. Now, sometimes there might be a break from one all-time high to the next all-time high, but it's okay. Because eventually, just eventually, it's going to reach a new all-time high. And that is some of the reasoning why some experts say just buy and hold. Buy and hold good quality companies because over time, they're going to increase in value. You can't go wrong. And I'll be honest with you, I think that's very valid. And I think it's probably the sort of strategy that most investors should use. Just find high quality companies and hold them for as long as possible because you can't go wrong. And I think that's where a lot of investors go wrong. They don't really look for those high quality companies. They look for story stocks, lower quality companies. And one of the reasons they do that is because the high quality companies tend to reach all-time highs more often. And some investors just hate that. I don't know why some investors just hate that. We see that on Ausbiz Call a lot. It's the share price has reached an all-time high. Should I sell? Something like that. Don't ever be wary of a company or an index or something reaching an all-time high. It's the natural progression of these sort of instruments. They're always going to be, hopefully, they should always be reaching all-time highs. Now, in saying that, the XSO all-time high was still back in, when was it, 2007? Yep, there it is, 2007. So XSO has yet to reach its all-time high. So a little bit different there. But the NASDAQ, if you have a look at the weekly chart, in 2007, the NASDAQ it's a little blip. So the all-time high just before the GFC, the all-time high was about 2,200 or something like that. Now it's at 22,000. It's gone up tenfold since 2007. So in 17, 18 years, it's gone up tenfold. So that is the quality, or that is the characteristics of high quality. And so I would say, if you could call an index high quality or not, NASDAQ would be high quality. XSO would not be high quality. Okay, so NASDAQ all-time high. Did we see the Dow Jones reach an all-time high? By the way, weekly, pretty good week for the NASDAQ, up 2.9%. So by far the best performing index, maybe apart from DAX and the Hang Seng. I have a feeling DAX and Hang Seng, I think maybe Hang Seng had a really good week. So did the Dow Jones have a really good week? And the answer to that is not quite true. NASDAQ or Dow Jones up 0.55%, fairly similar than the XJO. And in fact, if I had to compare the XJO to any index, it would be the Dow Jones, definitely not the NASDAQ. So when I see the Dow Jones down and the NASDAQ up, I would say we're more likely to have a down day. If I see the Dow Jones up and the NASDAQ down, I'm more likely to say we're going to have a good day. So I more than likely have a look at the Dow Jones instead of the NASDAQ in terms of trying to forecast or wonder or predict what the XJO is going to do. Now, NASDAQ reached an all-time high. Dow Jones is a little bit short of the all-time high. It's not that far off. And in fact, their all-time high is a little bit of a resistance level. So it's just above 45,000. The reason I say that, the Dow Jones did get to an all-time high back in early December and also on the 31st of January. And both times it struggled to move higher. So that would be the breakout level for the Dow Jones, around about 45. What was it? 45,000. What did I say? Yeah, almost 45,000. Now onto the Russell 2000. This is like sort of similar to the XSO small cap index. In fact, they do call it small cap, US small cap 2000 index. So this is, what is it? The smallest 2,000 companies in the Russell 3000. So smallest 2,000 companies in the Russell 3000. And I would call this better than the XSO, but not as good as the NASDAQ and the Dow Jones, because this is smaller companies. And over the last 20 years or so, it's the biggest companies that have really performed well. So the big tech companies. That's why NASDAQ has done wonderfully well. But in saying that, small caps at times can outperform. I haven't really done that recently, but I've always, well, not always, but I put this in purple box in quite a few months ago as sort of a resistance zone. Then it went through this purple box for about a month and then pulled back into it. And right now, the Russell 2000 is right on the top of this purple box. I'd like to see the Russell 2000 get above the purple box, remain or stay above the purple box, and then clear 2,450. That would be the important level for this particular index. So that's the Russell 2000, a small cap index in the United States. Okay, now onto international indices. Really interested to see the Hang Seng and DAX. Hang Seng up 3.69% on Friday session. DAX down a little bit. I have a feeling Hang Seng probably had a really good week. Now, I'm a little biased here because I do know it did real well. I'm pretty sure it did well. And that might be fueled by that really good end to the week. Okay, onto the Nikkei. Maybe not a good week. Nothing really happening with the Nikkei right now. In fact, it was up a little bit, 0.93%. That's a little bit more than a little bit. But when you have a look at the weekly chart, it just, you could argue that there is a slight upwards tendency, and a very slight, so gradually, very slowly, gradually going up. But other than that, no real big trend. In fact, the Nikkei right now is at the same level as it was back 1 year ago. So it's gone nowhere. When I say 1 year ago, I'm talking about, about 25th, 22nd, 26th of February. So they must have had the 23rd of February off. There was no trading on that day for the Nikkei. Anyway, so it hasn't really moved anywhere or gone anywhere in the past year, apart from that yen carry trade debacle in early August. But other than that, if you take that away, it's just gone sideways with maybe a slight upwards tinge right now. Anyway, onto the Hang Seng. And I'm just going to have a look at the weekly chart first. I am thinking Hang Seng is up 6 to 7%. Let's see if I'm right. Oh, 2 really good weeks in a row. Hang Seng, only up 4.49%. So definitely, my thoughts on the Hang Seng definitely have been led astray by Friday's session. So the majority of the gain for the Hang Seng was because of Friday. So that's very important, that your mind can play tricks on you. So don't just believe everything your mind is telling you, because your mind can play tricks. You need some proof. And the proof is that Hang Seng had a really good end to the week. Now, in saying that, the chart looks really good. Chart looks really good. We had a breakout, was at the end of last week, a nice little breakout it was on Monday. So really good breakout for the Hang Seng, a really good week, nice looking chart for the Hang Seng. I'm not sure what's happening. By the way, I am a shareholder of Alibaba. I just think it's cheap, Alibaba, and this is a really interesting chart. Alibaba, where is it? Baba, that's right. So I'm a shareholder of this one, and this is a really interesting chart. We saw that really good rally September, October. I think that was based off stimulus, and then it pulled back significantly, and then it's just gone on another massive rally. And look at the volume. Look at the volume on both rallies. Really big volume on this rally, and even higher volume on the current rally. So Alibaba was looking cheap, probably still looking cheap, and just going bananas right now. Alibaba. Now onto the DAX. I do know the DAX did reach an all-time high during the week, and I don't know why I know that, but let's have a look at the DAX. Yeah, so on Thursday, reached an all-time high. And look at just an acceleration upwards. Maybe the people are getting excited that maybe Europe are going to go on it on their own. Maybe America and Europe are losing a sort of relationship there, and the people are excited that Europe are going to forge their own future. They're going to do it themselves. And I think that can be a good thing for countries. Instead of relying on someone else, on another country, it's good for people as well. Instead of relying on other people, rely on yourself. So maybe that's why. I'm just making stuff up. I don't know why the DAX is doing what it's doing because of the sluggish German economy, but it's doing it. A beautiful indice. I would say this is a better indice than just chart-wise than the NASDAQ. Would I be more inclined to buy companies listed on the DAX compared to the NASDAQ? No, but the chart itself is really good. The week itself, only up 3.33%. And in fact, it's had quite a few good weeks. Really, 5 really solid weekly candlesticks. Now, one of those weeks wasn't up all that much because it opened lower, but a brilliant looking chart for the DAX. I'm going to delve a little bit deeper into DAX. In fact, we can do it right now. DAX index constituents. DAX index constituents. So I do know Volkswagen's on it. DAX components. What are the companies on it? Market cap. So Siemens, Deutsche Telekom, Airbus, Allianz, Munich, Siemens Healthineers, Merck, Mercedes-Benz, Porsche, BMW, Volkswagen, Infineon Technology, Siemens Energy. So Siemens is a big thing. Adidas, BASF. You know the biggest one, SAP. What the hell is that? I have no idea. It has a $338 billion market cap. What is SAP? World's leader in the development and marketing of integrated software packages. Software company. Oh, I bet you this chart looks spectacular. SAP. I can actually buy this because I can buy companies on the DAX. So this is possibly... okay. I think we've just found one of the reasons why the DAX is doing really well, and it could be just this, SAP. And the reason I say that, have a look at the DAX. have a look at the DAX, and then have a look at SAP, and there is a bit of a correlation there happening. There is a bit of a correlation there. The SAP share price has gone bonkers in the last 2 years. In fact, it's almost tripled in share price, and I think this is having a bit of an effect on the DAX. So again, I would say SAP is a worldwide company. I have no idea. It would be so shocking if it's not. Not much increase in revenue. In fact, when you look at the last 5 years of financial information, yeah, slight increase in revenue, and profit hasn't really gone anywhere. A bit of a decrease in margins. So something's happening with SAP. Anyway, interesting to learn about a country, an index, and I have no idea. Is it SAP or just do you call it SAP? I have no idea. But anyway, so there you go. DAX. Good. And now onto the FTSE, because we saw the FTSE break out a few weeks ago, maybe a month ago, and I think it's just continuing on its beautiful upwards trajectory. Yep, it was trading. We'll go back to the daily chart. It was the FTSE was trading in this range for about 10 months, maybe, and then we saw it break out. Beautiful breakout. If this was the individual company's chart, and I saw the share price of a company just going sideways like this, and then I saw this sort of breakout, I'd probably be buying. I'd be buying. So I would have been bullish on FTSE on that day, so 17th of January, and it has gone up significantly. Well, maybe not significantly, but definitely a beautiful trend developing for the FTSE. And again, I don't know why. You don't care. That's what the chart is telling me. So a beautiful breakout, and this is the definition of a breakout, something I'm looking at well, it's not my complete definition of breakout, because my definition of a true breakout involves the release of positive financial news, and I doubt FTSE has done that. Maybe they did. Anyway, so that's the indices around the world. Quite a few of them looking really good, particularly some of those international ones. But is there anything to dislike what you're seeing here? A lot of these indices are reaching all-time highs. Nothing to dislike. You may argue they're overvalued, but we have seen in the past that the market can remain overvalued for years before we see any sort of downturn. And who knows, but maybe we're going to see significant growth in the market over the next few years to justify the state it's in right now, the evaluation it's in right now, and the move up as well. Now onto indices. Now, something I've done for my watch list. So my watch list was just ordered by the time the moment I put them in. So whichever, if I put in say for the lithium watch list, it was just ordered by the time. So at the top of that wasn't Pilbara. I forget which company it was, but I started to order my watch list, particularly my commodities, by market cap. For instance, my lithium, I've done it with lithium, and I started doing it with oil. So, or energy. I think I've called it energy, not oil, just energy. So if you have a look at lithium watch lists, we have Arcadium at the top, but then being bought out, I believe, by Rio. Then we have Pilbara, Liontown, Sayona, Vulcan, Leo Lithium, which hasn't traded for a while, Novonix, Core Lithium, and then below Core Lithium, I sort of stopped because they're all below $100 million, and at that point, I don't really care. And I think the reason behind this is I want all the better not the better companies, but the producers to be at the top. And typically, if a company is producing, not always, but if a company is producing, they're going to be higher markup. Not always true. There's quite a few gold company producers who have a fairly low markup. But I just wanted to see the higher or the bigger companies, I suppose, at the top of the list, because they're the companies I'm more likely to buy when lithium turns around. Anyway, so let's go back to commodities. So that's one thing I'm doing. It's not the right watch list. So let's start with gold. Bit of a negative end to the week, but overall, daily chart looks bullish. Nothing to complain about gold. Now, maybe the only thing to complain about gold was that it was down 1.54% on Friday, but that was at the end of a good week, up 0.77%. You could say the weekly candlestick is a little bit negative because, well, slightly negative because there was a bit of selling because Friday was negative, but nothing to complain about when looking at the weekly and daily chart for gold. I go through a lot of gold companies' charts on the ASX, but I'd say 80% of them are looking quite bullish, and you can't go wrong now with gold. Now, in saying that, you could see a bit of a a period where gold prices fall. We have seen that recently. If you go back to the daily chart, there was a period here in October and November where gold prices fell from 2,800 down to 2,560. So maybe that's what we're going to see now. And that pullback can be a buying opportunity. Anyway, so no real negative thoughts about gold right now. Silver, I did have a look at silver's chart, and they had a really negative end of the week. That's a one-day candlestick is really negative. A lot of buying coming in and pretty big volume as well. So yeah, it looked really good. Would have looked really good at the start of the day because it was getting towards these highs we saw back in October, and I want to see silver get above those highs, but that is a resistance zone because of those highs. So we saw a bit of selling coming in for silver, but it's not the end of this short-term uptrend. If we start to see more selling and the price of silver fall, say, towards $30, that would be the end of this burgeoning uptrend in this commodity. But nowhere near as bullish as gold, but at least short-term, it's looking okay. Very short-term, just looking at the daily chart on Friday session, not as bullish, but that's okay. And maybe on Monday to go up again. Okay, on to copper. Well, this is another, so it looks like fairly weak day for gold, silver, and copper. And silver was up, by the way, up 0.39%, but copper down 2.38%. There is actually a name for the two-day candlestick. So you can look at one-day candlesticks, two-day candlesticks, three-day candlesticks. I do know this one, Bearish Engulfing. I have a feeling it's called Bearish Engulfing. Engulfing. See if there is. I'm going to see if there's a image. Bearish Engulfing. Here it is. This is from commodity.com. We'll just zoom in there. Whoop. Looks like I've got to. What's happening here? Continued with recommended cookies. Cookies. Okay. Whoops. Zoom in a little bit more. Okay, so that's a bearish engulfing. I don't know why I remember this one. So you have a nice green day and then a really interesting red day. So is that similar to copper? It's very similar to copper, isn't it? So that's a bearish engulfing, which it's bearish because it's in the name, bearish engulfing. So it's going to be interesting to see what happens over the next few days. Do we see copper prices fall away? It looked really good on Thursday because it looks like it was a breakout, getting above this little resistance level at about $4.68. And it's fallen just below that right now. So not now, but on last trading day. So copper's looking interesting. So feeling fairly bullish. Maybe not so bullish right now. I did have a look at some copper companies. Sandfire is at an interesting level as well. So Sandfire is still up there, trying to break above $11. Is it an all-time high? Is $11 an all-time high? Yes, $11 is an all-time high. So try to break above that level. I wouldn't be surprised to see Sandfire share price falls a little bit. Now, the reason I say that is there's a chance that most of the negativity in copper happened after our trading day has finished. So if you just have a look at the 1 hourly candlestick, we'll see. So copper did get to its high at about 7 p.m. on Friday, and all the weakness in copper happened on Friday night. So that's why I'm thinking Sandfire share price probably will pull back on Monday session. It's very important to know when the weakness happened for these commodities because the weakness could happen after our session has finished, and that is true for copper. Okay, so that's gold, silver, and copper. Still fairly bullish on gold. Both silver and copper looking interesting. Iron ore, I was feeling much better about iron ore not that long ago, just like copper, but we have seen iron ore prices pull back over the last few days. So got to $108. Now it's pulled back to $106, or what is it now? $105. That's not necessarily a bad thing, particularly if we start to see it pull higher. So what we want to see is no more selling, no more decrease in iron ore, and then we want to see iron ore gets above $108. That would be a fairly bullish move. So, of course, things don't move in a straight line up. You're always going to see it go up and down in waves. But that's a definition of an uptrend. Well, that's not the definition of an uptrend. But the definition of an uptrend is when you do get that waves each peak in the wave is higher than the previous one, and each low in apparently I can do annotates. So there we go. How do I get rid of the annotates? Clear all drawings. I can do that. Yeah. Okay. Apparently I can do that. I just learned that the other day. Anyway, so I think I'll go get rid of. There we go. Anyway, so that's the whole definition of an uptrend. That's what you want to see. And so even though we have potentially this is sort of another wave down, and we don't want to see it fall much further from here. And then the next wave, we want to see it get above $108. We want to see a new high. If we do that, I'd be a little bit more bullish about iron ore. But other than that, I did go through iron ore companies charts. Probably the only one apart from the big ones, I don't think the big ones I don't have no interest in. The only one I'm interested in is Fenix, not a shareholder of this one. And we did see a little bit of pullback on Friday. So this is the only good one I'm seeing. Some of the other ones, some of the smaller ones like Mount Gibson, nothing to see here. Nothing at all. Grange Resources, nothing to see there. Yeah, nothing in there. What about Fortescue? I can't remember Fortescue. Fortescue could be interesting if we start to see a bit more of a positive movement in iron ore. This could be a bit of a moving average crossover, and then we want to see the share price of Fortescue get above about $21. So this could be a good chart soonish, but a lot of things have to go right for Fortescue, and I won't have a look at BHP and Rio Tinto. Okay, let's move on to what's next in line. Should be uranium. I'm still loving when people say, oh, very bullish about uranium. Well, maybe in the longer term, but right now, in the short to medium term, uranium's actually really bearish. Uranium is actually really bearish right now. I'm not sure what's happening, but uranium is in a downward trend. And not only that, on Friday, we did see uranium drop. Yeah, to a long-term low. This is spot physical uranium. And the last time uranium was this low was back in September of 2023. So we're talking about almost an 18-month low in uranium. So even though there's still a lot of people bullish about uranium, in the shorter term, not so. And this is translated to a lot of uranium companies on the ASX. So I think they're still looking fairly weak. Nothing really happening there. So at this point in time, I'm not keen in any uranium just because of the uranium's chart. By the way, I do have a uranium watch list. So let's go through some of those companies. I have not listed or put these in order because at the top is Peninsula and Peninsula. At $1, Peninsula is $1. I did see someone fairly bullish on this one the other day because share price dropped a fair bit. And that would have been, this was, by the way, an expert, a technical analysis expert. I wasn't sure why. Share price dropped 18% on that day. And $1 seems to be a nice little support level, but I could see it falling from here even more. And to be honest with you, Peninsula, why? So we also have Bannerman. I suppose some people like Bannerman. No interest in that one. What else do we have here? Boss Energy. I should list this by market cap. Funny enough, Boss Energy doesn't look horrible, but you can see the longer term, this high here is a little bit higher than this high. So, and this low is a little bit lower than this low. So in fact, Boss Energy is still in a downtrend technically based off the definition. So, and it's starting to pull down from the most previous high. So interesting, Boss Energy. And what else? NextGen. Someone got disappointed with me that I didn't have NextGen in my uranium watch list, and NextGen's chart, nothing about this at all to like. Anyway, okay, so back onto commodities. Video technical. Next on the list is oil. We know oil has done nothing over a 20-year period. I still don't understand why experts, recommend Woodside. The only reason you might recommend Woodside or maybe Santos is if the share price is at a long-term low, that sort of thing. And I don't think you could say that about either. And definitely Woodside's chart looks pretty negative. The only one I might be keen on is Karoon, just because of valuation. But anyway, oil, why? At this point, why? I don't understand why anyone would be ultra keen on oil. Has pulled back a fair bit from the highs about $80, so it's now $70. I would be maybe keener if we do see oil fall to say 65, maybe even $60, that would be a long-term low, by the way. So if it drops below $65, we would be talking about a 3-year low. But other than that, I don't understand oil. And, well, I understand oil, and plus, Trump's drill, baby, drill, that would lead to an increase in supply in oil, and oil should drop. Prices should drop. Well, it won't happen immediately, but sentiment could shift. Sentiment alone could shift if they do start drilling. But I'll be honest with you, that sort of program won't work because it's up to mining companies or oil companies to do that. And you would have to incentivize them to do that. At this point, if oil prices decrease, they have no incentive to actually drill more for oil. So that's a problem with Trump's drill, baby, drill, that if it does suppress the price of oil, there'll be less exploring for oil because the price of oil is down. Now, you want oil prices to be higher to get more oil companies to be drilling, because we all know that commodities are cyclical. The higher the price of a commodity is, the more likely you're going to have exploration and more companies want to get into that commodity. If commodity prices are lower, less companies want to get into it. And we see that all the time. All the time. No one was interested in exploring for uranium until the last few years. Everyone was interested in lithium, and now it's going to shift. What has shifted, more companies are exploring for uranium versus lithium. And then sooner, who knows when, but eventually it's going to shift and more companies will be interested in lithium or Platanium or Palladium or one of the Palladium or whatever one of the other P elements is. Anyway, so oil, I think oil is also unique because we also have OPEC and they do control supply. We'll go through the rest of commodities fairly quickly. We'll stay on the weekly chart. Gas had a pretty good week. Gas up 12.54%, but it did fall a fair bit over the last few weeks. Yeah, it's just recovering. A nice little buy the dip situation for gas. Lithium, big, who cares at this point? Coal has been looking really weak lately. In fact, the last 2 weeks has been really negative for coal, down 9.15% and another 5.1%. So at this point in time, coal is not the place to be. Daily chart looks really weak as well. I also have a coal watch list. So let's have a look at the coal watch list. Actually, no, I don't. Actually, I have the coal companies in my mining and then near the top. So we have Stanmore. And Stanmore is at the last lows. In fact, these charts are going to look really negative. Yancoal, not as negative as I thought. Whitehaven is also at the previous low back in September. So you would think maybe coal prices are at a similar level than they were on the 11th of September. And New Hope probably looks really bad as well. Yep. So let's go back to coal. So there must have been a bit of weakness in September last year. Let's just verify that. Yeah, not as much. So maybe this particular chart is not really correlated that well to coal, because I'm not sure if this is thermal or the other one. What are they? Thermal, and there's another one. Anyway, and just tell me what the other one is. Thermal, I always forget thermal and metallurgical coal. Okay, tin. Oh, tin actually doesn't look that bad. I don't mind this one. Tin. We call him Tim. Tin's looking okay. So tin on the ASX. Metals X. There's probably a few others. Let's have a look at Metals X. Yeah, let's have a look at Metals X. Is this one looking good? Oh, hello, Metals X. Metals X. This is interesting. Interesting level where it is right now, 50 cents. We can see it getting to 50 cents 1, 2, 3 times in the past. Yeah, and struggle. This could be a breakout. Do I have this in my watch list? I do. I do have this in my watch list. I noticed this at some point. I might have noticed this a few weeks ago because it did touch, 30th of January, it did touch 50 cents and then pull back. This could be a breakout for Metals X. I'm pretty sure this is 10. I'm almost 99% sure Metals X is 10. And in fact, when it comes to 10, this is the only company that pops up on my mind. Nickel, yeah, we don't have to linger on nickel. And Palladium, bad end to the week, down 3.4%, but nothing to like in Palladium. And what about cocoa? I was going to buy some Lindt chocolate. It was on special, like 30% off, but still $5. I went, nah, not for me. I am not buying much chocolate at this point in time. I actually did buy some Darryl Lee chocolate bullets, dark chocolate bullets, they were half price. So it has to be half price for me to get interested in buying chocolate. I'm just like that. I like to buy value. Okay, now, I forgot. I was going to say, let's go to the individual companies, but let's turn our attention to crypto. Bitcoin. In a trading channel. It's been in a trading channel for about 4 months. It's not long, but yeah, right now it's almost in the middle of a trading channel. It's nothing much to talk about right now for Bitcoin, neither bullish nor bearish on Bitcoin in the short term. But when you do see a breakout, either above the top or below the bottom, that's the time to become bearish or bullish. But at this point in time, I am neither for Bitcoin. That's in the short term. I suppose I'm bullish in the longer term, but anyway. Ethereum, probably more bearish, if anything, for Ethereum. I wouldn't be surprised to see it get down to 2,100 again, and then flirt with trying to break below 2,100, and then maybe rally after that. But if it doesn't rally after that, it could fall further. So definitely, if I had to choose between Bitcoin and Ethereum, it would be Bitcoin all the way, just based off the chart. I can't judge the value of either instrument, so I'm just going to go for the charts for these two. And yeah, definitely Bitcoin's a little bit better because it's in the channel and neither bearish or bullish. A little bit bearish with Ethereum. Bonds, 5% yield for bonds is an important level. And what can you say? A bit of a pullback the last 2 days after a 4-day rally. So during the week, it's probably up a little bit. Yeah, just a little bit. Other than that, what can you say? I'd say if it drops below 4.6%, that would be bearish or bullish, depending on your train of thought. And if it goes above 5%, it would be fairly bearish or bullish. And if it goes above 5%, I would be surprised. I would be surprised, but who knows what's going to happen. If Trump does put in place a lot of tariffs, and he keeps on his migration or immigration or deportation bent, then inflation, because both of those are fairly inflationary. Now, I'm not sure which one's more inflationary. Tariffs is inflationary, but deportation is inflationary just because I've mentioned this on a video recently. The problem with many Western countries is labor. A lot of retirees, and there's not enough people placing those retirees. So a lot of countries, including Australia and America, are relying on immigration to prop up our labor market. But Trump's deportation means there's going to be a lot of jobs that won't be filled over there. And that means the labor market will be less, there's less competition. There's more competition for labor and there's less labor. So it's all about supply and demand. So if you actually decrease the supply of labor and maybe the demand of labor stays the same, that should push up wage demand. So wage levels should increase. For instance, there'll be a lot of those illegal immigrants would be doing jobs that no typical white American would do. And I think that's fair to say because same thing happens in Australia. I know, I do, not illegal. A lot of these people in Australia are not illegal, but they do come from overseas countries. They see better opportunities available for them, and they're willing to work a little bit harder. They're willing to do those jobs that those white Australians or white Americans won't do. So to entice those to do those jobs that those illegal immigrants were doing, they have to increase the wages. Even then, maybe not. Like fruit picking is a perfect example. To get people fruit picking, you either need people like backpackers in Australia or in California. It's people coming up from Mexico, and you need those people to pick fruit. And if they don't pick the fruit, no one's picking the fruit doesn't go to market. And what happens? If there's less supply of fruit and vegetables on the market, prices go up. So if that does happen, this is a long way to get to the end, bond yields will go up. Bond yields might exceed 5%. I'm not sure that's going to happen because there is a possibility that we're going to see weakness in the economy. A possibility. I'm not sure. I have no idea. It's the future. We just don't know the future. Anyway, so that's 30-year bonds. And I suppose we don't have to look at TLT. Currency. Australian dollar starting to go up. Ooh, go. So we all want, without fail, Australian dollar to get to about $1.50. maybe $2. That would make my holiday over there much cheaper. Much, much cheaper. We don't want to form much lower than this. So go Aussie dollar. Go, go, go. Okay, on to I'm being very selfish when I say that, but greed is very natural when it comes to humanity. Greed drives most things, which is, well, yeah, that's not true, but greed is very important. It's an awful thing to say, but greed isn't very important. Anyway, so on to some individual companies chart. You'll notice a running theme with most of these charts. Now, what I'll do with each of these charts, the likelihood of me taking a trailing position. So some of these I'll be way more likely than others. So we'll start off with a company called Atlas Arteria. They owned toll roads. Toll roads in the United States, France, something like that. I'm going to see what they say in TradingView. Toll road, they're definitely toll roads. Toll roads, Chicago, Washington DC, yeah, and I'm pretty sure also in France. I could be wrong with the France one. I'm pretty sure in France. Anyway, so I have really no interest in toll roads or toll road companies. I do. It's a nice infrastructure play, I suppose. Dividends might be attractive, but I just have no interest in tolls. And some people are bullish about toll roads because the price of tolls are linked to inflation, but who cares? It's all about growth and that sort of thing. And the growth of the cars on the road won't be that significantly higher over the next 5 or 10 years. So I don't see much growth in toll roads. In saying that, Atlas Arteria share price has dropped a fair bit over the last few years. Share price has dropped from a high of about 760, or maybe even higher than that. Just prior to COVID-19, it did reach about $8 and has dropped all the way down to 460. So maybe there's value in this one. And this is the sort of thing I'm looking for. So we have seen a bit of a low, and then the share price has rallied, a bit of a moving average crossover, and the share price is getting to 3-month highs and approaching a 6-month high in the share price. So this is the sort of chart I'm looking for every single day. Am I likely to take a trading position in Atlas Arteria? No, I think this is pretty low. I think this one is pretty low. What about EVT? Used to be event something. Oh, EVT, event tourism maybe? Oh, entertainment, ventures, travel. I thought this was event. And I just thought event, EVT. I always have thought of this as event. I'm going to go back in time just to see if they were called event at any time. Let's go back to 2019. Yeah, event, hospitality, and entertainment. Yes, I was right. Okay, I was unsure about that one. Anyway, event. They own cinemas. I think they own hotels, and I'm pretty sure they own some Threadbro or Perisher ski resorts or something like that. Anyway, not much interest in this one in terms of long-term hold. I always get really intrigued when experts on Aussie Business Core like a company like this, because I don't see any significant growth moving forward. And if you have a look at the weekly chart, you probably can see that. Over the past 9 or 10 years, in fact, the share price of this company has not gone up at all. So not a high quality company. But in saying that, the share price of Event in the past week has gone up 6.7%. And the chart does look a little bit interesting. I don't mind this one. I don't mind it. Now, the share price popping up on Friday to $12.40, so up 2.57%, was on low volume. I'm not sure. I don't remember the company releasing any results. I'm pretty sure I would know this, since I do look at all results. And I don't remember EVT ever popping up. So there is potential, just potential, that the market, I'm just going to see if they notified when they're releasing results. Nope. And last year they released their results. If you go back to February, they released their results on the 15th of February. So they might release their results soonish. And possibility, the market is saying or thinking, their results are going to be good. Now, possibly the share price popped up on Friday because someone saw the results, insider saw results and went, ooh, they're good, I'm going to buy some shares. Now, of course, that you can't do that. That's illegal, but still doesn't stop people doing it and doesn't stop from ASIC from doing anything about it. Good toothless wonder. Anyway, so this is the interesting chart. And it's going to be interesting to see, maybe because I use interesting twice in a short period of time, it's going to be intriguing to see if the market is right with this one. Now, share price has moved into an uptrend, in November or December, and the share price at 1240 is, we're talking about almost a 1 year high. So interesting chart for EVT. Am I willing to trade this? No. Higher than Atlas Arteria, but there's so many opportunities on the market. I'm not sure about this one. Helloworld, tourism. Helloworld. We have corporate travel, which I am trading right now. Own it for the long term. Trading that one. That one looks good. I suppose that's not as much tourism. So Helloworld, travel. And you'll notice a theme between the other two and this one. Bit of a shift, possible shift in sentiment and trend, just a possible with this one. Now, the reason I'm not as bullish on this one as maybe some of the other ones I'm going to show you in this video is because the share price did run up in early January and the share price went above $2.10 for a brief period, then pulled back. If the share price didn't run up then, I'd be much more bullish on this one because I'd have put the line, sort of the breakout line right there, but now I'm going to lift it a little bit. I'm going to put it there. So I think it could be looking interesting, this one. Helloworld, we have the moving average crossover. So this is a potential breakout coming. Do I have this? Did I put this in my watch list? No. I might just put this into my watch list to keep a closer eye on it moving forward. The reason I do that, put this into that particular watch list, those companies in that watch list, those charts I look at every single day. If a company is not in that particular watch list of some of the other watch lists I look at, then I won't look at this chart for a week. I'll look at it another week's time and then I might have another opinion. But interesting chart for Helloworld. I'll probably put this just below event and Atlas Arteria because this is not yet breaking out. For my definition of breakout, we need to see the share price at least a 3-month high. I do prefer a 6-month high. And because of that little bounce in share price in early January, we are talking about a 1-month high. If we didn't have that, the share price would be right now at a 6-month high. Web Travel Group. I'm pretty sure this is Web Beds, not the other part. So they separated Webjet into Web Travel and WBJ, I think. Anyway, so this is an interesting one. Share price collapsed on the 14th of October. We saw the share price rally in November. I think it was off the back of AGM, 27th of November. I'm just going to confirm that. Well, wait there. What's the ticker for this one? Web. They didn't change the ticker. 27th of November. I don't think it was the AGM because this company reports outside of the usual times. So it could have been it was the half-year results. So the share price actually did rally on the half-year results. Now, I think that little bit of resistance meant the share price or that rally wasn't sustainable, and that's why we saw a little bit of selling. But the very fact the share price has got back up to those levels, and hopefully it's quite obvious why I put this dashed line here. So there is a bit of resistance right there at 520, and the share price is trying to break above that level. It is trying and it's struggling. And this is a definite case. If the share price gets above 520, I think this could rally hard, possibly rally hard. Share price would then be getting above the 2 moving averages. And then next thing I'd like to see is a crossover in those moving averages. So definitely this is a one to keep an eye on. I'm not sure if I'd be buying this just yet or trading this just yet, but definitely one to keep an eye on. So that's Web Travel. Aussie Broadband, this is one I do own. And this is an interesting one. We had a potential breakout. Potential breakout on Tuesday. Share price up 2.77%. And this is why sometimes I just want confirmation that a breakout is happening. And over the last 3 trading days, share price pulled back below that breakout level. Now, in saying that, I wouldn't be surprised. I've seen this a few times. When a share price has moved into an uptrend, we saw a crossover the moving averages in late January. Share price is starting to trend higher. So I wouldn't be surprised to see the share price started to turn up again. So I wouldn't be as concerned about this failed break, because I do think this is just a pullback because the share price is showing signs of moving into an uptrend. And a fairly short wave pattern here. So you can see these highs, there's not much difference or distance between these highs. But the main thing here is high, higher, higher, and the lows higher. And if the share price starts to turn up from here, would have a higher low. So it's showing signs of a bit of an uptrend developing. So failed breakout, but I would be surprised to see the share price starting to go higher soon. So that's Aussie Broadband. I'm owning this for the long term, also have a trading position in this company. And I think I've talked about why I took a trading position, so don't have to talk about that. Now on to AIC Mines, A1M. Is this copper? Is this copper? I have a feeling this is copper. Yeah, copper. So this sort of mirrors what was happening in copper prices, with copper prices falling after the end of trading on Friday. Share price of AIC Mines should pull back. Now, this is something this is sort of a pattern I am looking for. Share price sort of going sideways for a long time, and then all of a sudden share price starting to go higher on pretty good volume. There's some nice volume coming in. So this is looking fairly bearish. Now, if this was a non-commodity company, I'd be much more bear or bullish on it. But it is a mining company. So that means I'm less bullish, because ultimately the price or the share price of this particular company will be influenced and affected by the underlying commodity. So if copper prices collapse, AIC Mines share price will collapse. Management of this company have no control over that. And that is one of the problems with mining companies. They are price takers, not price makers. But anyway, this is a really good chart. I do like this chart, but I'm less likely to buy shares in this one than, say, Alteria, EVT. I'd probably put Helloworld, Helloworld probably below this one. I'd put Web Travel below EVT and Alteria, and I put Aussie Broadband at the top. A little bit biased there. So I forgot to do that with those other two companies. But yeah, I put AIC Mines just below EVT. It does intrigue me, this chart, but I'm just concerned about copper prices. Cogstate. Oh, this is a long time coming. Share price has been drifting lower for a while. In fact, I have been bullish on this one since 2021, so about 3 or 4 years. And finally, finding something to like with Cogstate. Massive volume, late August, early September. Massive volume. Could have signified the low has been reached. And I think it may have been the signal that the low has been reached at 84 cents. We saw the moving average crossover back in early December. Then after that little bit of a rally, share price pulled back. It touched the 100-day moving average, and then has rallied again. And recently the share price did get above the previous high. So we are talking about a new high. That's good. And when the share price did get to $1.24, that was about a 6-month high in the share price. We have seen the share price pull back the last 2 days, has touched the 25-day moving average twice in a row, and we did see some buying coming in. So that's actually positive for Cogstate, and wouldn't be surprised to see the share price starting to move or continue to move higher from here and move into an uptrend. So I actually do like this chart. I'd put Cogstate definitely above most of the other charts in this. So this is one of my favorite charts. I'd probably like to see a little bit more volume coming in. I might put it just below Aussie Broadband. I do like Aussie Broadband, but maybe below some of the other ones. No, above some of the other ones. COG Financial. This company does release trading updates quite often, I've noticed. Or maybe it doesn't. I've just noticed them a lot. COG Financial. Go back to 3 months. You know what they do release? They release these unaudited trading results. That's what So they don't really release trading results all that often, or trading updates, but they do release these unaudited trading results before they release their official results. I actually don't mind that. I don't mind it at all. Quarter one, looks like they release it every quarter. So quarter one, half year. Just to confirm that. Audited results. Financial year 24 unaudited trading results. Yeah, it seems like they do release that quite often. Okay. And usually when I have read these unaudited trading results, they haven't really impressed. And that's probably why the share price has been in a downtrend for a while. Share price has gone down from about $1.50 all the way down to below $1. And we just had a moving average crossover. You can see there's little rallies in the share price of COG, and they always fail. So we have seen three, one July, one in August, one in October, and they failed fairly easily. Rally down, rally down, rally down. We saw another rally here, and the down wasn't quite as powerful. It was a weak down. It was a weaker pullback. And now we have seen the share price starting to go up. A moving average crossover. So what I'm seeing now is a little bit different than what we're seeing during the second half of 2024. And the share price did get above the previous high for a brief period, then pulled back. So that's $1.05, so $1.04. So if we see the share price starting to go up from here, that would be a really good sign. I do like this chart. A possible buy here for COG Financial. Other than that, I'm not sure there's any value in this one. I'd put this probably near Cogstate and Aussie Broadband. I do like this chart. I don't know. Those three are the ones I'm more willing to trade. Aussie Broadband, Cogstate, and COG Financial. Dominoes. Dominoes. Oh, yeah, this one, yes. This one I'm going to put near the bottom. I'm going to put this near the bottom. This one is just interesting because we did have that potential breakout when they released something the market thought was really positive. I wasn't so sure. And the reason why the market saw it positive was because they were getting these better numbers because of cost cutting. I don't like that path. I don't like cost cutting. Market sometimes really loves cost cutting, but it's unsustainable. What you want to see is growth in revenue. That's the best way for sustainable growth. You grow revenue, sustainable growth. Well, when I say sustainable growth, I'm talking about profit. Best way to sustain profit growth is by increasing revenue. To grow profit by cutting costs is not sustainable because costs can only be cut so much before you have nothing. Anyway, so I wasn't that impressed with that release, that announcement. The market loved it. Share price popped up to $36, and we have seen the share price pull back. Not surprised with that one. But we're starting to see a little bit less strength in this pullback. Wouldn't be surprised to see the share price go sideways for a few days and then start to go up again. That would be pretty interesting. And we're going to see a moving average crossover as well. Now, I have been fooled a few times in the past with Domino's. We can see the share price looked like it was moving into an uptrend back in late 2023. And then they released their results it wouldn't have been results. 25th of January would have been a negative trading update. Share price panicked, shot down a fair bit. Anyway, so not falling for this one, not at this point. But I do see why someone might argue for Dominos Pizza, particularly if we can confirm the share price is not dropping below 33. I would say 33 is an important level for Domino's. So I'm going to put a line right there. 33 is important. And if it drops below 33, less impressed. And I'm not that impressed. But I would put Dominos below Atlas, Arteria, EVT, and quite a few others on this. I do probably like it a little bit more than Web, and Helloworld, just because we need confirmation for those two. Anyway, and definitely below Cogstate and COG Financial and Aussie Broadband. Now onto Bapcor. Another moving average crossover. Share price on Friday did reach a long-term high. Well, I'm meaning a long-term. So we're talking about a 3-month high. I'm not the biggest fan of this company, Bapcor, but to be honest with you, I'm not the biggest fan of this chart. But we have the moving average crossover. It could be similar to what we saw back in September, October. There was another moving average crossover then. That was starting to look a little bit bullish, but it failed fairly quickly. So this could be sort of similar than that. Probably like a little bit more confirmation with Bapcor, and I'd put this particular chart well down on the pecking order. Not as interested in this one. The other thing I'd like to see is a little bit more volume coming in. Bapcor. So that's down towards the bottom of the lists. Probably near Domino's. 7 West. Don't like the company at all. Don't like. I did take a trading position in Nine Entertainment Group. So I do, if I had to choose between these two companies and someone had a gun to my head, you have to choose, I would choose Nine Entertainment Group. Preferably neither. But I'm willing to trade both. And I did take a trading position in Nine Entertainment Group, or Entertainment Company, whatever they could, just because we had a nice developing possible uptrend. And then for some reason, share price just popped up on the 11th of February, Seven West Media released their results on 11th of February, so maybe the market was impressed with those results, and this chart is actually looking a little bit better. So on to 7 West. Moving average crossover, and the share price is showing a bit of signs of turning around. I'm not as impressed with this chart as Nine Entertainment Group, but if the share price can get above 18 cents, we will be talking about at least a 6-month high in the share price. Value, I'm not sure if there's any value in this sort of company. Share price has been a downtrend for a long time. Now, at times, this has been a really good trade. And when I say that, I'm talking about, 2020, 2021. I still remember that, thinking, oh, maybe I should buy some shares in this company. There was another beautiful crossover, and look at that. You could have bought shares in this company at 15 cents, and the share price went from 15 to 58 over a short period of time. Will that happen here? Probably not. But you can see the share price of this company has been as high as 80 cents recently, and now it's at 17. So this could be a good trade. I don't know. Could be a good trade at this point. So down the pecking order, but I do prefer this one over Bapcor and Dominos and a few other companies as well. Mayne Pharma. Close to triggering a buy on this one. I am definitely biased against this company. And that bias has been fueled by 10 years of watching this company and do what it does and thinking, oh, this is a crap company. Anyway, that's been my thoughts on Mayne Pharma. Anyway, they did release something really positive. And when a company, even though I might be biased against it, releases a really good positive announcement, particularly if it's financial related, I am going to take notice. Would I have bought this if I was less biased? There's a possibility I might have. We did see the share price pull back a little bit buying coming in on Friday. I don't mind this one. I actually do like this one. Share price has remained above. I'm going to put the line right there. Has remained above that. If it keeps above that, that would be fairly bullish. Probably the best time to buy this would have been on Thursday, early Friday, when the share price was about 540. Share price currently 560. Don't mind this one. I do like this chart. If I had to choose any of these companies to trade right now, Mayne Pharma might be the top of the list. I think it might be the top of the list. There you go. Mayne Pharma. I like the volume as well. Okay, that's all I have for this video. Hope you've enjoyed it. If you have any thoughts, any questions, put those in the comment section of this video. Otherwise, I'm not the financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.